Welcome back to Real Estate 101. Today we're going to continue our discussion on mortgage financing and talk a little bit about self-directed mortgages, and I'm pleased to be joined once again by Tracy Brock of Dominion Lending Centers. Tracy, welcome back to the show.
Thank you, Joe.
All right, Tracy, so what is a self-directed mortgage?
A self-directed mortgage is when you use your RSPs, either at an arm's length or a non-arm's length transaction, to invest in a purchase of your own home or a refinance of a home or investment of a home, which would be a non-arm's length transaction, or an arm's length transaction. And then in a non-arm's length transaction, it would be with your investing in somebody else's mortgage.
Okay, so how does it work? What is the process?
Well, when you have a considerable amount of money saved in your RSPs, there's different vehicles, your mutual funds, self-directed RSPs that you can invest your money in. So the process is to get a considerable amount of money into your RSPs, and then you can determine what funds you want to invest in. And with a self-directed mortgage, as long as it can be a single-family residence, it can be a multi-residence, and it can be commercial.
All right, so what is considered a sizable amount?
Well, a sizable amount would be anything over $100,000. You don't want to put all your eggs in one basket, so you would take $100,000 and maybe invest about $50,000 into the mortgage. With any second mortgage or any type of investment into property, you want to start out small. You don't want to go in there all gung-ho and put all your money into the one fund. So if you have $100,000, you start with $50,000, that's a good start.
Okay, so what are the rules for these types of arm length transactions?
Well, an arm length transaction, which would be something that you're doing for yourself, is basically has to be governed by Canadian Mortgage and Housing Corporation. So whatever their terms are, so their debt service ratios, their rates, the current rates, anything that qualifies you if you were getting a CMHC mortgage, and you pay the premium on that mortgage as well, being the person who's receiving the benefits of that mortgage.
All right, so what about for a non-arm's length transaction?
Well, when you're doing a mortgage for a third party, somebody that's not associated with you by blood or marriage, the regulations are basically you decide on the rate, you decide on the term, and you decide on the fees associated with that second mortgage. It's not regulated by any government issued body, because the risk that you're taking is not a risk in yourself. So that is where the difference is, and you just have more flexibility on what you want to charge for rate and terms and fees.
All right, so what are the costs? Are there any costs for an investor that wants to invest in this type of mortgage?
Well, if you're doing it for yourself, there is a cost that you have to consider. There's registration of the actual fund. You always have to have an appraisal when you're doing it for yourself. The fees associated with CMHC, and generally the legal fees and everything associated with that. When you're doing it for a third party, most of those fees can be directed onto the third party. So they will pay for the appraisal. It's their lawyer's costs, those kind of ideas. So it just depends on what you're doing it for.
All right, so as an investor in other people's mortgages, are there any key advantages?
Absolutely, and when you're investing in another person's mortgage, it's a fixed income, it's a fixed monthly income. Typically people aren't going to default on their mortgages, so it's 1.1% across Canada, I was told just recently. And
obviously there would be security on the property.
There'd be security on the property. You decide how much of if you only want to lend to 75% loan to value in that home, then there's obviously 25% equity that you have in that home. You get a fixed income monthly, and you charge fees and your rates, and it goes right back into your RSP, so you're constantly building up that tax-free interest.
All right, and what about investing in your own mortgage?
Well, when you invest in your own mortgage, you're basically paying yourself. So instead of paying somebody else for your mortgage, the money's going back to you. Now, like I said, there are fees, so you have to kind of outweigh what a good time to do it. And not typically people invest in self-directed RSPs mortgages when the rates are a little bit higher, because it offsets the fees of what it costs to actually do it. But other than that, the advantage is that you're paying yourself.
All right, so are there any risks with self-directed mortgages?
Absolutely. With any second mortgage, or any type of mortgage, there's always the risk. There's the risk of default, and that's why when you're doing it, you want to make sure when you're doing it for a third party that you are making sure that there's enough equity in the home and checking out the area to make sure the resellability of the area. When you're doing it for yourself, that's one of the reasons why it's governed by CMHC, so that if you default on your own mortgage, it's covered by CMHC. So your RSP investment is still there.
All right, Tracy, so any last thoughts on self-directed mortgages?
Sure. The investment's not for everyone. Obviously, if somebody is looking for a quick return, this isn't the type of investment. You want to make sure that you're speaking to a financial planner so that your portfolio of RSPs is balanced properly. You're not just going out there and saying, this sounds like a great idea. All my money into RSP, self-directed mortgages. And you just want to make sure that what you're doing is viable with your long-term goals. When you're investing in real estate, sometimes it's a long-term investment, and if the market falls, you have to know that money's eventually going to pull itself back out again, but you have to make sure that you're in it for the long term, like most RSP investments.
All right, Tracy, thanks for coming on today's show, and look forward to seeing you again next month.
Thanks, Joe. It's good to be here.
So there you have it. If you need any more information on self-directed mortgages, get in contact with Tracy Brock of Dominion Lending Centers. I'm your host, Joe Tercera. Thanks for watching, and we'll see you next time.